Today, we are going to explore 6 of the top stock market indices from all around the world so that you have more investment options to explore for yourself. And how can I not start this video with the classic, the most mature economy in the entire world, the United States. You have probably heard of S&P 500 Index, the Nasdaq, the Dow Jones, the Russell 2000s. Don't worry if you never heard of them, because now you do. You now know 4 of the top stock market index in the most advanced economy in the entire world. And the most representative one here is the S&P 500, usually traded under the ticker symbol VOO or SPY with a brokerage account. It represents 500 of the largest publicly traded companies in the United States, or you can say 500 of the best companies over in the US. And next up we have Nasdaq, or more commonly known with the ticker symbol QQQ, QQQ. This is where you will find some of the biggest technology and internet related companies like Apple, Google and Amazon. And since they focus on high growth companies only, they do not include financial giants like your typical JP Morgan, Visa and also MasterCard. Whereas Dow Jones, on the other hand, or some call it the Dow or the DJI, is the classic stock market index created way back in the days. It used to be quite popular, especially for more veteran and elder investors, but over time it eventually got overshadowed by the S&P 500 index due to its relatively lackluster returns. And this index tracks the performance of 30 big companies based on their stock prices, which is rather different from how the S&P 500 works, as it looks at a company's overall size instead. And then we have the Russell 2000 Index, which a lot of you probably never heard of before because it tracks US companies from the smaller market cap of around $1 billion, which are typically companies with higher volatility, and that's why it's usually preferred by active traders instead. So long-term investors like you and I probably would have very little exposure towards them. And needless to say, the performance of the US stock market as a whole has been very outstanding for the last few decades. And I mean, just look at the average annual returns of the last 15 years or so, and you will find it hard to get another similar investment that is liquid, that is resourceful, accessible, matured, and also with high returns. Now, try to beat that. And much of this success can be attributed to its technology industry, which is again driven by tech giants that innovate so hard like Apple, Microsoft, Tesla, Amazon, Google, etc. Now let's take a look at Hong Kong, the capital of dim sum, tall skyscrapers and also expensive houses. For the past decades, Hong Kong has been Asia's top financial center, and investors often look at it as a gateway to invest in the mainland of China. And when someone mentions the Hong Kong stock market, they are usually referring to the Hang Seng Index, or HSI in short, and it comes as no surprise that more than 60% of them are actually big Chinese tech companies, such as the names that you know: Tencent, Alibaba, China Mobile, HSBC, etc. You might have heard some of it. And while the HSI should technically represent the Hong Kong stock market or the country's economy overall, it is actually highly influenced by trade tensions between the US and China. Take the last 5 years for example, with all the political crackdowns and also changes in China, rising tensions with the US, the pandemic and all the other mess, HSI has been on a downward trajectory ever since. And to make it worse, there are additional risks in the form of the uncertain Hong Kong politics, no thanks to its very close proximity and also political ties to China, which could lead to unexpected changes in their monetary policy and potentially unfavorable regulatory changes. And uncertainty is definitely definitely the last thing every investor hopes to see. But not all hopes are lost, because on the bright side, Hong Kong is a mature and well-established market in Asia region, much like Singapore. And for most investors looking to invest in China, again, they will need to do so through the Hong Kong stock market. And that also comes at the bonus advantage of currency stability, as the Hong Kong dollar is pegged to the US dollar, which has historically shown strength and appreciation against most of the other currencies worldwide. And since we are here, how can we not talk about one of the largest economies in the world? China, a massive nation with a population of over 1.4 billion people. Their three main cities are also their main markets for trading: Beijing, Shanghai, and also Shenzhen, with the Shanghai Stock Exchange, or to be more specific, the SSE Composite Index, being the world's third largest by market capitalization. And little fun fact here, their largest company by size is Guizhou Maotai, a company that manufactures alcoholic beverages and has a market cap of 2.35 trillion yuan, or about 330 billion US dollar. Yes, just by selling alcohol. But do you know that their alcohol is more like a commodity than an actual drink in China? Interesting, right? But that's a story for another time. Well, back in the 1930s, the Chinese market was significantly influenced by the rubber share price movements, but today, as we speak, they have progressed so much that the dominant sectors such as the manufacturing, finance, and IT now take up a significant chunk of their entire economy. And over the years, the SSE has been rather volatile, to say the least. You see, everything was looking good until 2007, where the asset was overinflated and the global financial crisis was starting, and eventually the SSE index wiped off around 65% of its entire value. And then between June 2014 and June 2015, the SSE shot up more than 150% as the state-run media outlets promoted Chinese equities to inexperienced investors, creating a classic stock market bubble, which, eventually burst, and the market dropped by around 43% of its value, so much so that until today they have not recovered from their losses. But having said that, we shouldn't take away from the fact that China is one of the world's fastest growing major economies alongside India and also the US. So investing your hard-earned money in China can, indeed provide exposure to this growth, which can also help you to diversify your portfolio across various sectors. And if you believe in a multipolar world, aka a world with multiple powerful countries instead of just the US like right now, then China with its various initiatives like BRICS, the Belt and Road BRI, might just be the reasons for you to consider investing in the Chinese economy. However, it's important to note that China's regulatory environment can be complex and dictator-like, if I may, and that means they can simply shove any policies overnight before you can even react to it. And as we all know, they have rather limited transparency regarding financial health and also their accounting standards, and that all in all makes it very challenging for foreign investors like us to evaluate them accurately. So do keep this in mind if you plan to invest in the Chinese economy. Quick pause, if you want to invest in the international markets, I would highly recommend you Interactive Brokers. They are highly regulated in over 11 different countries, including the US, Singapore, Hong Kong, UK, and so many more. Plus, this is the best part, they have one of the cheapest commission structure in the entire industry. You will save a lot of money converting your currency and investing with them. You have my words on that. Feel free to use my link down below to open an account for yourself and start investing in no time. Alright, let's get back into the video. Next, let's explore the United Kingdom. British? The land with afternoon English tea, royalty, gentlemen, ex-global superpower, now turning into regional power. While their recent politics have been very dramatic to say the very least. London, its capital, was ranked number 2 in the Global Financial Centers Index all around the world, which technically means they are very competitive in terms of being a financial center, only behind New York. Their most popular stock market index, the FTSE 100, tracks 100 of the largest companies listed on their London Stock Exchange, which covers top names like Shell, AstraZeneca, HSBC, Unilever, BP, and so many more. But that said, the performance of the FTSE 100 has not been that amazing throughout the last 20 years, and you will see that the UK economy pretty much stagnated as compared to the current superpowers like US and China. And this is not the sole problem of the UK alone, but pretty much the common problem of the broader Western European region, except for Ireland, and that is no thanks to the European sovereign debt crisis, which happened during the 2008 global financial crisis. And also, it got worse thanks to the lack of government stimulus after the crisis. But on the brighter side, if you look at the UK market as a whole, they actually have a very well established regulatory framework for financial markets under the FCA's oversight, which is very well known for its prudent policies, and this provides investors all the necessary protection and also transparency to safely invest in the nation itself. The London Stock Exchange, LSE for example, is one of the most popular stock exchanges that you may have heard of already, CSPX, and they do in fact offer a huge variety of publicly listed companies coming from various countries, and that just shows you how attractive the LSE is as a capital market to international businesses and also investors. Alright, the next country in today's list, I just came back from there, the land of Mount Fuji, takoyaki, anime, and Disneyland on steroids, Japan. They used to dominate the stock market in the 1980s, but in October 1989, the bubble burst and Japan has yet to climb back to its peak ever since then. Their GDP remains stagnant no matter how the government tries to stimulate the economy, even with 0% interest rate. And fast forward to today in 2023, we can say that it's been the lost 30 years of Japan. The Nikkei 225, Japan's iconic stock index, is unlike any other because it's a price-weighted index where companies with higher share prices have a more significant impact on the index, and the top companies include household names like Uniqlo, SoftBank, Sony, Canon, Nissan Motor, and Honda Motor. And in recent times, the Japan market is bouncing back with rooms for recovery, and you might just be interested to know that Warren Buffett is betting on Japan's recovery as he has increased his stakes in 5 different Japanese companies earlier this year. Which, you know, as much as I hate to say it, that could be an indicator that he knows something that we all don't. I don't know, let me know in the comments down below what do you think. And from a financial perspective, Japanese stocks are relatively affordable with a price to earnings ratio of 18.09 times for the Nikkei 225 compared to the S&P 500's at 25.17 times, and that lower PE ratio could just mean that it has higher potential to grow. But you know, of course, it also reflects the lower investor confidence in Japan's future prospects. I mean, the fact is Japan's got an aging population, and from an economic perspective, that translates to lower purchasing power, and they would require more resources from society, not to mention the lack of manpower to generate growth in certain industries. But to be fair, their technological advancement is definitely up there, so that might just even things out for them.
Bye bye. Please enjoy.
And last but not least, let's go to India, the next China, or so they say, because in April 2023, India has surpassed China and became the world's most populated country. Just look at their GDP, the growth is so obvious as compared to European countries like France, UK, Spain, and Italy, who have been very stagnant for the past decades. So is India now more advanced than Europe? Well, look looks like it in terms of overall GDP, but if we count it per capita basis, India is still very far behind, and this perfectly shows how statistics can be misleading if not interpreted correctly. So what about their stock market? Back in March 2020, the BSE Sensex was around 30,000 points. Now it's almost at 66,000 points, 100% growth in just 3 years. Quite an impressive journey, right? Well, India has been benefiting from recent geopolitical tensions. When all countries are boycotting Russia, they bought massive amounts of oil and gas from Russia at a super discounted and attractive price. And not to mention the tension between the US and also China has brought companies like Apple, Samsung, Boeing and so many more to set up factories in India. Damn cheeky, right? But that said, India is still considered an emerging market with plenty of growth potential, and with its large and young population, it could potentially become the next global manufacturing hub just like China. But you need to consider a few things here. Currency risk, social risk, and political risk that can all influence the nation's economy. And while their corporate governance has improved somewhat over the years, some, if not many, publicly traded Indian companies may not actually meet international standards just yet, and that will always haunt investors regardless of the market. For instance, back in September 2022, an Indian businessman named Gautam Adani suddenly became the second richest person in the entire world with a net worth of over 155 billion US dollars. But earlier this year, his company Adani Group was accused of stock manipulation and also accounting fraud. Classic, right? And as a result, he lost almost half of his wealth almost instantly, and the company's share price is now down more than 40% year over year. But to be fair, this one company is not representative of all the companies over there. Financial frauds happen everywhere in the world, even in the most advanced stock markets like Enron, Lehman Brothers, FTX, Theranos, etc. So that is all for this video. Hopefully I gave you a better understanding of the global economy and the top stock market indices you need to know. While it might not be the most in-depth one, I hope this brief overview can point you towards the right direction for your research. In the meantime, if you want to invest in the international stock markets, like I've said earlier, look no further. Interactive Brokers will definitely be the best broker to help you do just that. Check out this video to open an account for yourself and trade within a day or two. See you over there.